it's all positive on the markets. The Fed's decision and positive economic data setting the tone.
I think that what the Fed is getting is exactly what it wants. It wants to get assets prices higher. At the same time, what they've announced yesterday was that they are easing the quantitative stimulus measures that they put in the market, but they will not raise interest rates soon. So the words they use is that rates will stay low for an extended period. Now, typically in the markets are interpreted as being at least 6 months. So in essence, what they're saying is at least for the next 6 months, we're not going to raise interest rates in spite of the fact that there's growing strength in the economy.
So are you also of the view that they will only increase, let's say in the fourth quarter of 2010?
Maybe not even then. We might actually even only see interest rate rises at the beginning of next year, because remember now that Mr. Bernanke is the expert on deflation. One of the things he doesn't want to happen in the US is severe deflation, and the way to do that is to keep rates low and to keep expectations that of interest rate rises under control. So I think the extended period could well last for the whole year.
That decision also led to a rally in commodities on the back of a weaker dollar. Your opinion on that?
Two reasons for that. The one is just that commodities are also priced in dollars, so if the dollar is weaker, these commodities go a bit stronger. So it's one of the places that investors go to, especially gold. But at the same time, it also means that there's a higher likelihood that the economy would be strong a year down the line, and therefore good reason for commodities to be strong.
Right. We also have retail sales here in South Africa came in better than expected, down about 1.7% from a negative 3.8% in December. Judging from these numbers, is it still a bit too early to say that we're seeing a meaningful rebound in consumption?
I think it's definitely too early. We are likely to see a meaningful rebound in consumption over the next year. We're seeing all the leading indicators of that moving up. We haven't seen actual spending being strong, and spending, especially in the housing sector, is still extremely weak. So all the interest rate sensitive parts of the economy is still struggling, and the banks are still very tight with their money. They're not lending very easily at the moment, and therefore that makes it difficult for consumers to spend.
We saw banks yesterday also rally on the back of the Fed's decision, helping the JSE as well. What was your view on the strength on the JSE yesterday?
I think that's mainly in reaction to global commodity prices and the, let's say, the strong undertone of markets. Markets have been trying to rally. They've been looking for an excuse to rally. And that really is on the back of very good prospects for economic recovery over the next year, especially in South Africa. And also at the same time, the Fed is still trying to push asset prices higher, and they're actually succeeding in doing that.
Okay, next week we've got a number of data points coming out. We've got CPI. It's expected to stay below the target band for the first 6 months of the year, and the next 6 months of the year it will move above that 6% target band due to the World Cup and electricity prices. What is your view on that?
My view is that we are likely to see some downside surprises to that, because the underlying economy is still so weak that it actually puts more downward pressure on prices than people normally think. And the other thing is that the rand is still very strong. One of the consequences of the weaker dollar was also that we saw a very strong rand, and that obviously also feeds through to lower prices. So I think that we are likely to see some people overestimating how high inflation might be. So I think we're going to get some nice surprises on the inflation side.
PPI inflation surprised to the upside, though, increasing by 2.7%, if I'm not mistaken.
Indeed.
Is that the trend going forward? Are we going to continue seeing PPI edging up?
Yes, I believe we will. The thing that you have to remember about PPI is that the prices of exported commodities also comes into that index. So if we see things like platinum prices, gold prices, etc. rising, that also puts upward pressure on the PPI. So the PPI is not necessarily a good leading indicator for CPI anymore, but it gives you a good idea of what happens at the factory gate or the mine gate in South Africa.
Marcus will also be watching that current account figure out next week as well. The quarter three was at 3.2% to GDP. Are you seeing further contraction?
We think it'll contract a little bit further. We might actually end up at around the 2% level, and we won't really see that expand until spending in South Africa starts going up, and we'll also see a positive impact on the current account from the World Cup because of the visitors coming in. Spending on tourism also an exported service, if you like. So the current account should also benefit from the World Cup.
The SARB, with all that information, will also be meeting next week. Your expectations for interest rates?
I think that there's a very widespread expectation that interest rates will stay at their current levels for, might I say, an extended period. I think that the Reserve Bank is not comfortable bringing rates down lower because of the fairly high rate of inflation still, so they won't bring rates down before they see inflation coming down. But at the same time, there's also very strong leading indicators, meaning what they've done already in terms of lowering interest rates will start pushing through over the next year. So I think they're pretty happy with where they are.